Scope limitations, as we said earlier, and as we say throughout the entire exam, if you have a scope limitation on anything, time to get out of there, right? Time to modify or withdraw from the engagement, time to modify your opinion to disclaim it. Management's refusal to furnish written representations is a scope limitation. As we said before, it's a cause for you to disclaim an opinion or withdraw from the engagement. However, based on the nature of the representations not obtained or the circumstances of the refusal, the auditor may conclude that a qualified opinion is appropriate. Okay, so as we said before, right, we saw this on a couple slides ago, and we're seeing it now again. Yes, this would be grounds to disclaim an opinion or withdraw. However, sometimes a qualified opinion is appropriate. Further, the auditor should consider the effects of the refusal on his or her ability to rely on other management representations. If the auditor is precluded from performing procedures he or she considers necessary in the circumstances with respect to a matter that is material to financial statements, even though management has given representations concerning the matter, there is a limitation on the scope of the audit, and they should qualify the opinion or disclaim an opinion. Different circumstances you may see when it comes to these scope limitations. Contingency treatments. This is something you would have seen on FAR if you've taken that. And if not, well, here it is. Some free points to be had. I like it a lot. Anytime you see a chart, love it. These charts were made with love here. The exam commonly likes to ask questions about uncertainties such as lawsuits. Now, you want to prepare accurate financial statements, but what if you don't know how the numbers should look? And why would you not know how the numbers should look? Well, because there's uncertainty, because lawsuits are not certain. It takes time to get to a settlement. It takes time to get to the outcome of the lawsuit. Management must analyze the existing conditions surrounding the uncertainties. The decision to accrue and or disclose is based on the probability of loss and whether the loss can be estimated. Here's a chart with these different scenarios. If you are getting sued by some customers and they say your products were defective and possibly caused harm, well, that's not good. But it's possible, right? Like, we're taking this from an objective standpoint as auditors. Possible that this company is in the wrong. It's possible that the customers are lying about it. It's possible that they were just using the product wrong. There's a million possibilities, and it's not our responsibility to be the lawyers. Guess what? Otherwise, we would have went through 3 grueling years of law school. And to be honest, I would have taken the CPA exam instead of going to law school. But that's just me. So here, if the loss, and the question will tell you if it's probable, reasonably possible, or remote. So you're getting sued, right? Same circumstance. You're getting sued by these customers. And the question will say if it's probable, reasonably possible, or remote. And who's going to tell you that? Like, just to give some context, well, that's going to be management's legal counsel. So any company is probably not going to hire their own lawyers to work full time. Yeah, I mean, plenty will. But for the purpose of the exam, management of any of these companies is going to have an external law firm where they hire them, just like they're hiring us as auditors. They hire a third-party law firm, and that third-party law firm is going to say, "Oh yeah, hey, sorry to break it to you, but it's probable that you're going to lose," and that's not good. So what happens if it's probable that you're going to lose? In this case, we would accrue that loss, meaning if they say it's probable you're going to have to pay out $5 million to these victims, you're going to have to accrue the $5 million and disclose that in the financial statements. However, if you cannot estimate the loss, and the question will tell you this, it'll say, yeah, we know we're going to lose, but we don't really know exactly what the amount is going to be. Well, in that case, you are going to just disclose it because you don't have an amount there. If it's reasonably possible, so it's not probable, it's kind of in the middle, we're just going to disclose the loss amount if we have that, and if we can't estimate it, we're just going to disclose that we're going to give as much information as we can and just be as relevant as possible. And lastly, if it's remote, then you're going to ignore it. Or if they're suing you because they used their fan, they bought a portable fan from you and threw it across the room to crush a bug, and they broke it and it ruined their apartment. You're not supposed to use a portable fan by throwing it across the room. Sorry to break it to you, but you're not going to win that lawsuit there. Did I just give legal advice? I take it back. The auditor will normally not add an emphasis on matter paragraph for uncertainties that are appropriately accounted for. However, if a question indicates that the uncertainty such as a lawsuit is unusually important, then an emphasis on matter paragraph may be added. We'll talk about paragraphs, right? We've got a whole lesson with that where we're going to talk about these emphasis on matter paragraphs and how essentially those are just something the auditor includes in the report, just really bringing attention to something that the auditor believes is pretty important. There are other matter paragraphs, which is just when the auditor wants to bring something to attention that is not in the financial statements. but this is a circumstance in which we would add an emphasis matter paragraph. Here's a much more in-depth chart here. We saw the nice light version, right? But let's dive through the even more extensive version, because that was just losses. Now here we get into gains. We get into, well, what if there's a range, right? What happens in this case if the loss contingency is probable and the amount or range can be reasonably estimated? We accrue the amounts, and if it's a range, right? If it says, oh, we're going to pay between $1 and $2 million out, well, you're going to put the minimum, right? You're just going to say, okay, we're going to accrue $1 million. And then once the lawsuit actually comes to fruition, then you're going to, maybe it ends up being $1.2 million or 1.5, whatever it is. Then you're going to adjust that amount, make a journal entry for the correct amount. If the amount or range can be reasonably estimated, you're going to just disclose that range, because even though you actually accrued 1.2 million, or let's say we just accrued 1 million because that's the lowest, you're still going to disclose the full range and say, okay, it's going to end up being between 1 and 2 million. Now, what about, you're also going to disclose the nature of it. Is it a gain or loss, or kind of talk about like what is actually going on? Are these victims? Like what is going on? Did they get hurt? That's just going to be something that's going to be talked about as a disclosure. What about if the loss is reasonably possible? What we saw, probable, reasonably possible, and remote before. Same thing. Here we're just going to disclose it, and this is something you should definitely memorize. And also, if you haven't taken FAR, you're going to see this exact chart in FAR. Shocker, shocker. And I would memorize this. You can see points, you can see sims on this. I think it's a wonderful chart to memorize. If it's reasonably possible, you're going to disclose both of these. If it's remote, but it's a guarantee for others, here's something where I wouldn't expect to see this. I'd really expect to see remote. This is meaning where for you it's remote, but those who are suing you consider it a guarantee for themselves. And this is not something I'd really expect to see in questions. I'd really expect to see them saying it's just remote. But in this case, you would still disclose it. So yes, this is here, but I would ignore that. Gain contingencies. We haven't seen these yet. Well, if it's possible that you are suing someone and you're going to win, right? Flip it on the other side. You're suing someone because they didn't pay you, and you're expected, it's probable or reasonably possible to win. Well, unfortunately, you don't get to, remember, accruing is good, right? You want to accrue revenues. But the rules are stacked against you here. And that's just kind of how I describe it, right? FASB wants you to be a little more conservative. They want you to, you're definitely accruing losses before you actually have to pay it out, but you can't accrue gains until they actually happen. So think about it like that. The odds are kind of stacked against you. But that's a way I like to talk about reg, for example, is like, all right, the IRS, wants to help you in this circumstance, or the IRS wants to hurt you in this circumstance. So that's why the rule is the way it is. So in this case, FASB just doesn't want you like going crazy and overstating potential gain contingencies. So in this case, you would just disclose them, just like you would for, all right, these reasonably possible losses. And then lastly, if a gain or loss is remote, you're going to ignore it. There's a lot of lawsuits that go around. I'm sure people suing people all the time. And if there's just not a chance it's going to happen, then you're going to completely ignore it, do nothing.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.